Hi, um, welcome back to another video. Today we will be going over cost price, selling price, and markup percentage. So this is key terms when doing financial literacy, especially bookkeeping for a sole trader. So a trading business is basically a business that sells stock, and usually they buy stock from a supplier and they sell it at more money to get the profit, obviously. So now we will be going over the key terms or the key formulas we need to know for this financial literacy and bookkeeping. So cost price, you'll often probably see your EMS teacher refer to this as CP, is the price which goods are bought. So it's how much we paid for the stock that we bought from our suppliers. We then have the selling price. Teachers usually refer to this as SP. This is the price that we sell our goods. Usually we add a markup on the cost price and then we just sell it. The markup percentage, we refer to this as MU percent, and if it weren't a percentage, and just then if you were to say SP minus CP, that would just be MU, and that's basically like the profit, most would say. But this is the percentage that profit technically is of the cost price that was added to the cost price to get the selling price. So the difference between the selling price and the cost price is in percentage, is the markup percentage. So another thing to know, so since this is basically working with money, when calculating the cost price and selling price, we always round off to the two closest decimal points, the two decimal points. Everyone should be able to know how to do that by now in grade 9. And with markup percentage, if you get an answer over 100, it's not necessarily wrong, the percentage. Because some businesses, it depends on what you sell. They do sometimes add a markup of over 100 to the cost price to sell for profit. So now we'll move on to some examples which I have set out. The first one reads, receive 1,500 for cash sales, markup of 25% use. So the keywords for this is received 1,500. This tells us the selling price. Then they obviously give us the markup, which we should be able to tell by now. Yeah, so this is easy. So we can tell that they want us to calculate the cost price. So the cost price the formula for this would be 100 over 100 plus the markup. We will just say markup since I'm not adding a percentage sign. So we'll just say markup, but we refer to this number here. And then we multiply this by the selling price. So we'll just move on. I'll just stop talking unless something interesting happens. So, no, I'm just substituting these now. So, 25. Okay, so by now we should know that this equals 125. So I'm just going to cut to the chase and say that this is 100 over 125, which I'm pretty sure gives us 0.8. Let me just check. 100 divided by 125. Yes, 0.8. So we'll just cut to the chase and say we already know that answer. So we'll say cost price equals 0.8 times 1,500. And this should give us the answer of, it's best to always check your answers on a calculator too, but it should give us 1,200. So therefore, our cost price for the goods that we sold for 1,500 was 1,200 Rand. So the amount that we bought the trading stock for in this example was 1,200 Rand. We added a markup of 25% and we sold it at the price of 1,500. So now we'll move on to our next example. Goods worth 500 Rand sold, markup of 35% use. So here the keywords are worth 500 Rand. This tells us the cost price because if we are the business and we bought something, that's how much it's worth. So that's basically how we can tell that's our cost price, and this we should know by now is the markup percentage. Now, so since we have the cost price and the markup percentage, they want us to calculate the selling price, which should basically be how much we're going to sell the stock for, or how much we did sell the stock for. So it will be selling price. This is a formula now. 100 plus the markup, not adding the percentage sign because usually, we're just working with numbers here. Plus 100 over 100 times the cost price. So you can see it's kind of backwards, the selling price and the cost price formulas. Like the fraction is switched and we multiply by the cost price instead. So let's just substitute our values. We should know this is going to be, this is basically 135 because it's 100 plus the markup, which would give us 135. So we'll just put 135 here over 100. I could also just cut to 1,35 because we should know how to divide that by now. Times 500. Okay. So this would give us, well, shorten it to, simplify it to 1,35. You should know how, since 2 zeros, this is how they taught you in grade 2. Move this 2 backwards and the decimal goes there. So we now multiply this by 500 and take out your calculators and let's check what the answer is. 1,35 times 500 give us 675. Therefore, we sold the goods that was worth 500 Rand at a cost price of 675 Rand, at the selling price of 675 Rand. So our goods that we bought was 500 Rand. We added the markup of 35% and we basically sold it at 675 Rand. So we can also calculate the profit that we made here and in the previous one. How do you mind? 500 and then give us the 175. This would be our profit that we made basically. So this 35 is equal, the 35% is equal to 175 Rand. Moving on. Sold goods worth 2,000 Rand at 2,500 Rand. Keywords here, this tells us how much it's worth, so this should be the cost price at 2,500. The bigger number you always assume to be the selling price because, who's going to buy stock and then sell it at the lower price without a markup and technically losing money instead of making a profit? So this is our selling price. So since we have these two, we'll probably have to calculate the markup percentage, which would be markup percentage equals selling price minus cost price. This tells us our profit, by the way, which we usually refer to as the markup over the cost price times 100. So now we'll substitute our values, which would basically give us the difference between the cost price and the selling price, which would be 500, but we'll get there now. Honestly, actually, we'll just skip to that because by now you should know that 2,500 minus 2,000 is equal to 500. But in normal exams, they want you to write down your entire formula and calculations for that. Usually they give 4 marks out for this, 2 marks for the formula and 1 mark, 2 marks for the formula and 2 marks for the answer. So it's best always to write out your full equations and your calculations so you can maximize your marks. So it'll be 500 over 2,000. This should give us 0.25 times 100. So markup percentage equals 0.25 times 100. And by now you should know also with multiplying with the grade 2 method, 2 zeros, so the decimal point moves 2 places back. So that'll give us the markup percentage of 25%, or just 25. It doesn't matter. It's better to add the percentage, so we know that we're talking about percentage, not the actual amount difference. See, because the actual amount difference is 500 rand, which we get when we subtract the cost price from the selling price. So this would be the amount profit, which is equal to this. So this is basically how we calculated our 3 important formulas or 3 important things you need to know for financial literacy. Financial literacy is basically accounting, but it's just we just do bookkeeping in EMS nowadays. So this is key terms, especially when calculating the cost of sales or the sales in the columns. And sometimes they just want the markup percentage as an extra question. So it's best always to know all 3 of these formulas at all times. These do also come in useful in math sometimes, maybe math literacy. Not sure about math going forward. But this is the end of the lesson. I hope it was easy and understandable. Thank you.